the strategic risk register, which is where Victoria is here. And that obviously then feeds into the draft internal audit plan for 22-23. And obviously the linkage between those two is pretty critical. The other main objective of today's meeting is on treasury management and considering and, if appropriate, approving the proposed policy and strategy and practices around treasury management. And then there's a couple of other papers that we have which follow on previous discussions. We may in the past have considered the external audit plan at this meeting, but as Linda will explain in section 10, that is now going to happen in April, at the April meeting. So hence the reason why we think we can get through everything in 90 minutes, albeit now it's 80 minutes. So we'll see how we get on. Okay, apologies for absence. Wendy, I think we've, as you said earlier, we've had from Councillor Flint. And,
yes, Chair, that's the only one I've received.
Okay, and at the moment it doesn't appear that Councillor Borley or Councillor Credulous have been able to join us, is that
yes, right? Councillor Borley has now joined us, Chair.
Oh, excellent. Welcome.
I'm here, Mark, don't worry.
Thank you very much indeed. Excellent, thank you. Gosh, even more people present. Excellent. Right, declarations of interest. Remind people, members, the need to declare any disclosable pecuniary interests they have in any items being discussed in the agenda. Anything to be declared? No. Okay, thank you very much. Chair's remarks. The only thing I was just going to say was just to update other members of the committee, and as part of my familiarisation and getting up to speed with everything, I've had the opportunity since our last meeting to obviously have a number of different conversations with various officers on various matters. I attended the investment board meeting on the 10th of December in an observer capacity. It's a very interesting meeting. It's helpful to see the sort of scrutiny that takes place over the investment programme there. Linked to that, I also attended the overview and scrutiny meetings on the 15th of December and the 10th of January. The 15th was very much an opportunity to quiz the Mayor on various matters. The meeting on the 10th of January, there was quite a lot of discussion around air quality and the strategy and policy around that. So, and I have a further follow-up discussion with Councillor Baton, the chair of the Overview and Scrutiny Committee, on Friday of this week. So, there's a strong desire from both her and me to make sure that we're coordinated in what we're doing. And then I had an opportunity to observe the board meeting on Friday of last week, the 14th of January, so the main WMCA board. A lot of discussion there around transport and the opportunities. And obviously, I'm sure you're aware of what's going on there. And then finally, a couple of whistleblowing triage meetings in November and December as well, considering one or two other matters. So that's all I just wanted to say at this point, just to make sure that other members of the committee are aware of that additional interactions that are taking place. Unless there's any questions on that, just pick up on the minutes of the last meeting of the 2nd of November. Just in terms of the accuracy of the minutes, there is one update that is required on page 3 in relation to section 23, page 3, around reference to Grant Thornton and an extension of their tenure. Actually, I've discussed this with Louise and Wendy, and we'll get some revised minutes out here. That discussion was actually extending Grant Patterson, who is the lead audit partner, not Grant Thornton, who are the audit firm. So just to clarify that particular point. And there is one typo in there as well around the approval process. So Wendy is aware of those two. Any other comments from any other members of the committee in terms of the accuracy of the minutes? If not, I will take that as people are happy for me to approve them with the relevant amendment we've just discussed. In terms of, yes, sorry.
Just accepted, that's it, thank you.
Thank you very much. Thank you, Mr. Chair. In terms of matters arising from those minutes, just to, there were two or three points, I think, where there was, just to clarify, under 21, I can't remember whether anybody said, did we actually get the accreditation around the GDPR regulations? Do you know? It was confirmed at the last meeting that we had applied for the accreditation. Do you know whether we've actually received it?
Chair, it's Lorraine here.
Unfortunately, there were some gaps and the accreditation hasn't been awarded at this stage.
Okay.
The digital and data team are now working on that to resolve.
Okay. Can we bring that back to the next meeting then?
Yeah.
Because it was quite an important point coming out of the report that was previously presented. Okay, very good. I think the next one also, Linda, there was an undertaking to report back on employment contracts under the investigations of whistleblowing update report. Again, if maybe that could be brought to the next meeting, if that's okay.
Okay.
Just any proposed changes, or you may want to say something now, but we'll just bring a report back to the next meeting.
No, I'll bring it back. That's okay.
Fantastic. And then finally, I think there was under 29, Councillor Walmsley had requested some further information around the projects being assured under the SAF. Again, we're considering that at our next meeting, so could we make sure that that is brought back to the next meeting as well under that update report that we have there. Okay. Any other questions or matters arising that other members of the committee have got with regard to last time's meeting? Say either, given we're in virtual mode and I can't get everybody's picture on the screen, if people can use the hands up facility to signal to me if they've got any other comments they wish to make. But any other matters arising from anybody at this stage? No, very good. I think on external audit appointment, again, we do have a specific paper on that for this meeting and under item 10. So Linda will update us on that. Lastly, from me, forward plan for next year, which is set out on page 9 of the agenda. Obviously, we've got a pretty full meeting in April now, with including the proposed external audit plan that Grant Thorne will be bringing to us, as well as finalising, a variety of matters you can see on the paper there. And then I notice an ambition to be able to approve the accounts at the 28th of June. Linda, I suspect as a committee we may be able to review the accounts. Whether our auditors will be able to get to a position of being able to approve them at that point, I think maybe again you'll pick up on in section 10. But from my perspective, Wendy and others, it will be great if we could get the dates for the rest of calendar year 22 in place. I'm sure all of us have diaries where, if it's possible to get those dates sorted sooner rather than later, that would be great. But other than that, I didn't have any other comments. Any other questions on the forward plan from people?
Yes, Chair, my apology for 12th of April because it's clashing with the local meeting of the licensing committee here in Coventry.
Okay, thank you very much for that. Any other comments? No, if not, we will hand over. I'll hand over to Victoria. Are you going to take us through the update on the SRR?
I will, thank you, Chair. Good morning, everyone, and Happy New Year to you all. It's a bit late to be saying that at the 18th of January, but I haven't seen you this year, so Happy New Year anyway. With your consent, Chair, I'll share the high-level deck with everyone for high-level visibility.
Yes, please, that'd be super.
If someone could just give me indication once you can see that on your screen, I'd be very grateful.
Yes.
Okay, lovely. So, okay, I just plan to take you through the high level detail that's in the papers that are with you today, in acknowledgement that the PDF entry of the risk register that is sent to you needs attention zoomed to the power of 100 to be visible to you. Wendy has kindly also sent out that as an Excel version as extra, so that there's a level of visibility to the committee to see the granular level of detail if they wish to do so. So I have made the assumption that everyone has read the pack that has been sent out, and I'll just take you through a bit of the high-level changes since the risk register was last before you. So I'll move to the third slide in the deck. So this just pictorially shows you the strategic risk register in the form of a heat map. You can see that there's now 22 strategic level risks, and that is an increase of 1 risk since the risk register was last presented to the committee back in November, if I remember correctly. And that 1 new risk is an escalation from Transport for West Midlands that I'll give you a little bit more detail about in a couple of slides' time. So this has an associated issue as well as the risk associated with it, and that was escalated in December. Okay, but it's worth noting that that risk that has the most material value, see I'm circling 25 here, it's one of the 3 having a residual materiality of 25. It's worth noting that that has significantly been remediated since it was raised in the November-December review, with that track having reopened in December. So it's really important to note how hard TFWM are working on remediating the associated issue that's caused the escalation for that risk. So previously there were 9 risks in that very high bucket, but we've had 1 move in and 1 move out that's reduced to a limited rating. So you can see that we now have 3 limited level risks, where previously in the last review cycle there were 2 that fell into that bucket. So that's just a high level pictorial view for you. And just moving on to the next slide, I'll give you
sorry, just it is obviously worth mentioning that these, or all of those risk scores, are after the mitigation of controls, aren't they?
It is, yes.
And, you know, those aren't the gross risks. And the only reason I raise that is when we get onto the internal audit plan, the analysis that's shown is the gross risks. So there is a slight inconsistency at the moment. But we'll just want to make sure committee members are aware that the presentation there is net risk. As per the SRR, which is whatever it is, column Q, for those of you who have a desire to go into the full Excel spreadsheet.
Yes, so as Chair says, that is net risk or residual risk, whichever preferred terminology you want to use. Okay, so you see here the 9 very high rated risks in detail with their numbers and their titles. The bottom one is just highlighted because that's the new risk that's been escalated from the Transport for West Midlands risk registers to the strategic level. And I'll just give you a second to just have a quick read through those before moving on to the next slide. Okay. So this risk.
Yeah, Chair, on this one, there is an issue of the capacity and capability. I'm trying to understand what's the risk in it.
So I'll take that if you like, Chair.
Yes.
So there's 2 capacity and capability level risks, Councillor. One being at the all staff level, and the other being at the leadership level. So this is about our capacity and capability to manage our organisation, both from a resourcing level and a capability of the resourcing having the correct skill sets. Does that address the question, Councillor?
It does give me the understanding, but I'm trying to figure out how to mitigate it again. If there is a risk, I mean, there's an issue how to handle it in the end. So that's why I highlighted in my head that this need to be addressed somewhere. Thank you.
But I'll just rest you assured, Councillor, that both risks have robust mitigation plans assigned to them, and those mitigation plans are reviewed on a bi-monthly basis by the risk owners and the strategic leadership team as a collective. Those are reviewed for adequacy and potentially further development. Does that address the question?
It's probably worth flagging, Victoria.
Yes, it does. Yes, thank you.
If you look in the strategic risk register, I think it's the largest box in terms of actions that are currently being taken to address that particular risk, including the recent appointment of a recruitment partner. So it clearly appears to be one that is being carefully considered by the leadership team.
Yeah,
Thank
and it also continues to evolve as well each review cycle. So again, this risk trend slide has each risk has roughly 4 bars, and you'll notice that 2 of those risks have only 1 or 2 bars, and that's quite simply because risk 21 was escalated in the last review cycle, and risk 22 was only escalated to the strategic risk level in this review cycle that we're currently talking about today. So I'll just give you a quick moment to have a quick look at those risks pictorially. Okay, I'll move on. Okay, so this is a little bit of information on this slide just about what's sitting behind the picture or the diagram that you've just seen in terms of the risks. So one of the things to note that we've talked about the risks that have a very high materiality, and it's absolutely noted that 7 of those very high risks have remained static in the last three review cycles. But that's acknowledged to be, given the very challenging circumstances in which we operate at present, in the last 12 months, a combination of the impact of the pandemic and Brexit causing challenges with the risks that we're carrying as an organisation. However, all of those risks, as you will see by looking at the detail in the Excel spreadsheet, have associated remediation plans. And just as I said to Councillor previously, they are vigorously reviewed on a bi-monthly basis by their individual risk owners, and then reviewed and discussed at strategic leadership team as a collective on a bi-monthly basis also, to make sure that those risks do remain absolutely adequately with mitigation plans in place for them. Okay, so it's important to be aware of that. And one of the other factors here that I really wanted to point out about is, you can see we have currently 3 limited rated risks. Now, 2 of those 3 limited rated risks, they're green risk scoring residually 1 to 5, have been static for 3 cycles of review. So whilst you can't see this in the pack before you, the evidence of this, the strategic leaders have agreed to de-escalate those risks to be managed on local risk registers. So 1 risk on the housing and regeneration risk register, and the other risk on the productivity and skills directorate risk register. So those risks, because they're being an appetite for three review cycles, will be de-escalated from the strategic risk register to be managed on other appropriate risk registers. That's not to say they will be closed and the focus from managing those risks will fall away. It's just that actually they're appropriately being de-escalated to directorial risk registers for the management, and that will actually be visible in the next presentation to the committee. So that will be visible on the Excel sheet for you to see. It will also be detailed in the high level deck that those risks have closed from the perspective of the strategic level risk register, but have moved across, and we have appropriate auditory trails for those having been picked up by those other risk registers as well. So I can see I have
Councillor Meeson has got a question.
Yes, it was with regard to housing. I was sort of surprised to see that it is marked up as green on the registered residual risk, and Victoria's just been explaining something towards that. But I'm surprised that is shown as green, given that there's so much uncertainty around future housing at the moment. I know local authorities have got their local development plans. Some of those have been to examination in public, and we're still awaiting the outcome of those. So I'd have thought at the moment that housing is very much up in the air. Could Victoria just explain why it's shown as green.
Yeah, I'm not the expert of this risk, but have been informed by the risk owner. It has been reviewed in the review cycle. I can take that question away and provide an explanation as to why the owner feels that our mitigation plan is fully appropriate. Linda, would you like to come in here? I can see you have your hand up.
It was only just to say, yeah, happy to take that away for more detail. I mean, I think this is part of the presentation, is where you want us to do a deeper dive into some of these risks, we can do. But from our perspective, clearly, from our delivery perspective, we are happy that we are on track with our housing delivery, etc. So rather than it being a wider regional issue, I think this might be obviously showing green, because actually we are quite well advanced with our housing development from a combined authority perspective. But we'll go away and take that away and bring you a more detailed update back next time.
Okay.
Very good. Thank you. Thank you.
Thank you, Linda. Okay, just moving on to the very last slide I have. And this is just showing you the key movement that we have in the risk register since it was last presented before you. And as I mentioned earlier on, we've had one of the risks that were previously in the very high range moved into the limited range. And that's, as you can see here, risk number 6. And this is around the overall delivery of devolution objectives. And this was really, rather than it being due to extensive enhanced mitigation, this was about rationalising the risk and rewriting the risk to make sure that it's not duplicating other risks that are already represented in the strategic risk register, and actually focusing on only measuring the risk at hand. So we're not over emphasizing the risk that we're carrying, and we're correctly reporting that. So that risk, following that rewriting, has been reassessed as being a much lower level risk. It was really the likelihood of that risk materialising that changed following the rewrite of the risk. So you can see that's a risk score, a risk trend going down. And then we've got the new risk, as I mentioned to you earlier. So risk 22, as I've already stated, I'm sort of duplicating myself a little bit here. This is a risk that's already materialised and has an associated risk mitigation plan attached to it. That's and that remediation plan is significantly worked its way through now with the track, with significant levels of the track having reopened in December, and TFWM are working very hard to ensure that the rest of that issue is fully remediated in order to limit the disruption to the users of the tram service. It's worth clarifying that that is the 2G fleet that we're talking about here. Okay, so that is all that I had to share with you today. Fiona, Linda, I'm not sure if there's anything you wanted to add before I hand over to Mark to take the question. I can see his hand is up.
Nothing from me, thank you, Victoria.
I think my only question there, Victoria, was my understanding this risk is about the fleet. It's not about the track. Is that right? Just to be clear. Obviously, there were 2 issues initially.
Yep.
The issue was around repairs to the track, but that was, my understanding, was resolved relatively quickly. This risk that has been introduced is about issues that were identified with the fleet. Although, again, as you say, a lot of work has taken place, and I'd say, obviously, I'm aware of some of those discussions through my attendance at the meetings I referred to at the beginning of the meeting. So, just to be clear, that it's a fleet. It is a fleet issue, yes, Chair. Okay, so just throw it open to any other questions from members of the committee. I'll say our role here is to review the strategic risk register, make sure that we're comfortable based on our knowledge and understanding of that the risks are being appropriately identified by the SLT. Again, just to be clear, I think, Linda, the SLT reviewed this last on the 5th of January, was it? Is that right?
Yes, it would have been. Yeah, absolutely.
So it is very much an up-to-date view from the leadership team as to their view of the risks, the strategic risks. So our view is to note the risks as identified on this register, and obviously have an opportunity to question those, as Councillor Meeson just did, and challenge and question, and obviously seek responses where we have any queries. Any other questions arising from Victoria's presentation? Can't see any hands going in the air. So, okay, therefore I'll take it that we can confirm that we have reviewed and considered this register and the changes since our last meeting. So this will be a regular feature of our meetings, given the responsibilities we have as an ARAC. And the last thing I was just going to say, I think, Victoria, this is your last meeting, isn't it? So I just wanted to acknowledge all the hard work that you and the team have put into getting us to this position around the SRR. As I said at the last meeting, I think certainly it feels like this is very much a live and document that is shaping the thinking and appropriate responses to those risks. So thank you for everything you've done, and your successor is Peter Estrella, who will be joining. And I've got a meeting actually lined up to meet up with Peter in early March, I think. So, but thank you very much for everything you've done for us over your period with us, and best of luck for the future, obviously.
Thank you, Chair.
Okay, very good. Thanks, Victoria. Next item on the agenda is a paper, Linda, that I think you're going to talk to, which is this came from a question that was raised at the September meeting, actually the last meeting of my predecessor. And there was a question around the financial implications of COVID. So there's a paper here to respond to that particular query. So Linda, over to you. Is it you?
Well, yeah, just going to let Lou do this. She's done all the work, so she can introduce it.
Okay.
Thank you, Linda. Thank you, Chair. So this report has been prepared to set out the financial implications of COVID on the combined authorities' revenue and capital monitoring position in this current financial year. Clearly, the day-to-day financial position has been and will continue to be closely monitored. And I guess at the time the report was written, whilst it wasn't yet clear what further restrictions will be put in place moving into 2022, there remains potential that further restrictions will continue to impact the combined authorities' finances for some time. So the most significant financial impacts of the pandemic to date are the loss of commercial revenue within the transport portfolio, and also the impact on delivery of the TFWM capital programme. In terms of revenue, the position is slightly clearer than capital, but the drops in income on the commercial bus network and also the metro network, we're still seeing reduced levels of patronage, although the government has put in place a package of funding to support the loss of commercial revenue and the loss of income from fees and charges from services, and this has helped to mitigate these losses in 21-22, as they did in 2021, of course, when the pandemic first hit. So in paragraph 3.4, there's a summary of the revenue cost impact of the pandemic in the 21-22 financial year. So there's some further details in there, which I'm happy to take questions on. But in terms of capital, the position is far less clear because there's a number of macroeconomic factors that are placing stress on major capital projects, both regionally and nationally. So they include the COVID-19 pandemic, but also disruption as a result of Brexit and the local competition for resources. So regionally, we're impacted, for example, by HS2. So it's difficult to quantify a precise number in terms of the impact on the capital programme. There's a point to note as well is the secondary impact, where investment is underpinned by forecast future passenger revenues. So that's set out in paragraph 4.4. And finally, as we've heard from Victoria this morning, the position is continually monitored via the Strategic Risk Register through the authority's financial monitoring report and monthly progress reports that are provided to the Combined Authorities Investment Board. So that's all I wanted to say, but happy to take any questions. Thank you, Chair.
Okay, thank you very much, Louise. Obviously, I had an opportunity to review a draft of this and posed a couple of questions then, which you've addressed in the paper, in the final paper anyway. So I have no further questions. I'd say other members of the committee, again, Vice Chair.
Thank you. Just call me Ram, please. That'd be helpful. Thank you. On the section 3.4, there is an issue of money being used on Summer Lane. 2 items. It's 197,000, I think, put together. I'm trying to figure out, did the government actually reimburse that money somewhere? I just want to understand that is mitigated somewhere.
Unfortunately not. So those costs have been met by the Combined Authority because they weren't eligible for the government scheme to reimburse sales fees and charges. So those costs have actually been met by the Combined Authority itself, as they're not eligible for the scheme that reimburses us.
Okay, that means what the Chancellor at that time said, whatever it takes, it didn't happen. It's just we have to foot the bill by ourselves. Yeah, okay, thank you.
Probably worth just flagging that the overall position, however, as set out in 3.7, 3.8, is one whereby I think, Linda, the view is that these costs can be absorbed within the budget overall. Is that fair?
Absolutely, yeah. So we've either mitigated it through through the overall surplus, because as the report says, and the report that went to the CA board on Friday, we were forecasting a surplus of £699,000 this year, and that is net of us absorbing these costs. Yeah, so we've accommodated them in year.
Okay, thank you.
Thank you. Very good, Linda. Thanks.
Okay. Any further questions on this paper? I say it was a response to questions posed at our previous meeting, I think. So I don't remember obviously who raised the question at that particular point in time, but hopefully this provides the information that committee members were looking for. As you say, Louise, in your opening comment, it's on capital. There were a number of different factors at play, and the long-term implications of delays obviously are something that will come through. And even on the revenue side, understanding what the counterfactual is to this as to what it would have been without COVID. And I suppose the final observation is, and you mentioned patronage, and I know again at the board and at overview and scrutiny, there was a comment around, you know, what is going to be the position when we come out of COVID? You know, I think most commentators would argue it's probably unlikely to go back to the position it was. Some believe it might, but you know, working patterns have changed and may have changed permanently. So we shall see. We shall see. Okay, very good. If there are no further questions on that, I think we're back to the subject of Treasury. So, Mark, obviously, having had the briefing beforehand, we've covered a number of items in your report. But yes, do you want to talk us through any particular highlights? Obviously, the objective here is to get to a position whereby the committee are comfortable to approve the policy statement and the strategy, Treasury management strategy for 22-23. So over to you, sir.
Thanks, Chair. Linda, I didn't know if you wanted to introduce anything in advance, but if you're happy for me just to continue straight into it.
Happy for you to lead, Mark. Thank you.
That's fine. Thanks, Linda. So yeah, in introducing the report, I thought I'd refer back to some of the points that Nazmin made in a presentation earlier on to sort of give some context. Firstly, from the perspective of the regulatory framework, so the report is presented to ARAC for endorsement and for onward approval to board, and that complies with the with SIPA's Code of Practice on Treasury Management in the Public Services. As Nazmin alluded to, a new code was published the week before Christmas, and SIPA have advised authorities that it will be a soft launch, and therefore the adoption of that code doesn't need to take place until next financial year. As a consequence of that, we will be bringing a refreshed report to ARAC and onward for board for both the adoption of the new code and to refresh our strategy as early as possible in the new financial year as well. In terms of the key context for the report itself, and particularly in the area of internal borrowing, if I draw members' attention to sort of table 2, which I think is on page 37 of your pack, I think this gives a strong steer on the overall context of the strategy itself, which shows that the authority has a rising capital financing requirement or underlying need to borrow over the next few years or so, moving from Naz referred to last year's balance sheet date, which was 444 million, upwards to nearly £1 billion, sort of 2 years hence, 2 to 3 years hence or so. So that's the global context, if you like, of the strategy that we're working within. As can be seen from the table itself, we are internally borrowed to a large degree, and Naz set out the parameters of that and where the sources of that internal borrowing comes from. Nonetheless, we'd expect over time, given that rising CFR and the fact that those sources of internal borrowing are finite, that we will need to externalise borrowing at some point over the next year and a half to 2 years or so. And that flows into our cash flow forecasting particularly. So we're constantly monitoring when that point arises, when the need to borrow arises, and that will inform us when it comes to what and who we borrow from at that point in time. From the perspective of economics, and there was a discussion about interest rates and interest rate rises, within our investment strategy, and as can be seen from our portfolio, we currently have a wide degree of maturity. So we're trying to ladder our maturities over time to reflect that anticipated increasing interest rate environment, so that maturities are falling off as the yield curve rises over time, and we have the opportunity to then reinvest at those higher rates. And therefore, we'll be carrying on with that process of relatively short-term investments, probably maturities of 3 to 6 or 9 months or so, and creating that ladder going forward into the future. And aside from that, I think that covers off the main points that Naz mentioned. Internal borrowing remains the key component of our borrowing strategy, but moving forward, we will have to externalise debt as those finite resources of capital grants received in advance and our own reserves and balances fall. By nature, the first thing that will happen is our investment portfolio will fall down, and then we'll need to borrow into those products to meet the capital finance requirement itself. But we will still be maintaining an internal borrowing position over time, unless or until interest rate forecasts flip in such a fashion that it no longer makes it economic to do so. I think that's all I have to say by way of introduction, and I'm happy to take questions thereafter. Oh, sorry, one final point. One of the things that was raised in Naz's presentation was the authorised limit on borrowing, and she mentioned our debt cap with Treasury. Generally, when it comes to our own authorised limit for borrowing, we tend to set it, as Naz alluded to, at the level of the CFR plus a buffer. Generally, we set it around £40 million or so, just for contingency purposes, and that limit will be included within our capital strategy, which will go to board in February.
Very good. Thank you very much, Mark. I had 2 or 3 quick things. One, and you've just started to reference the 1 point. In your report on page 40 under Treasury external debt cap, it does reference an update to, it says are expected to be finalised with Treasury during 21-22. Is that imminent, is it, in terms of what the figure will be going forward?
Those conversations are taking place currently, and I think Linda and Carl can probably give you more detail if required. Okay.
Sure, yeah, Mark. So I exchanged some emails with HM Treasury a couple of weeks ago, and they said they'll be in touch, and then they'll arrange, they'll make sure we have a limit in place before the 31st of March. Okay. At the minute, it's just over £1 billion. We don't expect it to decrease, but we need to get into negotiations with HM Treasury in the next few weeks.
Okay. Very good. Thank you. So a couple of other points which largely come out of the presentation that Naz provided. On 2.41, sorry, this is, I happen to note that we don't actually reference borrowings, which was the point she was making about the fact that borrowings was explicitly added to the the definition of treasury management. Is that right? So we, in 2.41 on page 33, sorry, it says investments in cash flows, banking, money market and capital market transactions, but doesn't actually explicitly say borrowings in there.
That is correct, and that's probably an omission on our part that it needs including that sense. We want to be in the older definition that's included from the older code.
It's all right. There you go. Just prove I was listening to Naz. There you go. And second question was just on borrowing strategy. Apologies if I can't see this here. She referenced both maturity profile and balance of fixed and floating rate borrowings, and obviously we have a proposal with regard to maturity strategy in terms of indicators of maturity on page 46. Is there something on here on fixed versus floating?
Not specifically. I mean, of the most of the loans that we have are fixed rather than floating. The new loans that we have are equal instalments of principal. So there's some element of floating within there. But for the purposes of reporting, what we have there is the loan structure that we have at this moment in time.
Okay, all right. I don't know whether you think it'd be worth just adding in something around a view on fixed or floating into the borrowing strategy. And then the last thing I just had was on reporting, where she referenced 3 times a year. And I think again in the report it references, this is in 2.3, it says the board will receive the strategy, a mid-year review and annual outturn report. So just I don't, the board versus ARAC in terms of that reporting, where does that sit?
Certainly the intention is always for ARAC to endorse and review those reports before they're onward approval to board.
Okay, all right. Okay. That was it for me. Thank you. Again, open it up to other members of the committee in terms of questions to Mark on the proposed strategy, policy statement and strategy. So anybody got any further questions they'd like to pose of Mark or Linda? I think there's one hand up there from.
This is mine, Chair. I think again, I'm just trying to remember in my figures that the figure was mentioned earlier, 581 million as a working capital. Yeah. And when I looked at that on page 37 with the other figures, I couldn't figure it out how it works. Yeah. That's why I was asking at that time. I think Mark can probably help me on this, please.
Yes, certainly. I mean, as I mentioned earlier, Naz had expanded upon our balance sheet more so than is in the report itself. But I'm perfectly happy to add in the components of that element into our tables for future reference, so you can see where that value is coming from.
Yeah, I think she was referencing March 21 numbers, actually, wasn't she, in her report, which actually aren't, they aren't quoted in table 2 anyway. So
yeah, so you're taking.
We probably can't see them.
So you're taking published data, obviously, so the real values, actual values as recorded in our accounts, and obviously our strategy is about our estimation of this year and our forecast moving forward.
Yeah, absolutely. Maybe Mark, you can just provide a brief.
Thank you.
That'd be great. Any other questions from members of the committee on treasury management? I say I don't want to overemphasize this too much, but this is an important part of our role, and it's this, as you heard from the presentation this morning, there's quite a lot of very clear guidance about our responsibilities in this area. So this is an important part of our role. So unless there are any other questions, can I take it from committee members that we're happy to approve the policy statement and the strategy? Perhaps with just those tiny caveats of the points I just raised at the beginning, just in terms of a minor tweak. And again, if committee members are happy, because our next meeting isn't until April, that we can agree this policy statement and strategy, subject to me just confirming those tiny amendments that we just discussed.
Agreed, Chair. Agreed.
Thank you very much indeed. That's great. Right. Is it you, Linda, or not on the next one, or is Lou going to do this?
No, I'm happy for Lou to lead this one. Thank you.
Thank you, Linda. Thank you, Chair. So This report has been prepared to seek approval for the Combined Authority to opt into the Public Sector Audit Appointments National Scheme for auditor appointments for the 5 years starting 1st of April 2023. So members will be aware that the Combined Authority opted into the national scheme in 2017 along with the majority of eligible bodies. 484 bodies out of a total of 494 that were eligible took the decision to opt in 2017, including all 7 of the Combined Authority's constituent authorities. So for audits from the 2018-19 financial year onwards, the PSAA appointed Grant Thornton as the Combined Authority's external auditor for the duration of the 5-year appointing period. So this current appointing period ends on the 31st of March 2023, and a decision is now required to determine whether the Combined Authority opts into the national scheme again from 1st of April 2023. As set out in the report, the preferred option is to opt in to the PSAA's national scheme, as it's considered that this provides the best value for money and assures the appointment of suitably qualified and independent auditors. Just to note as well, the Department of Levelling Up Housing and Communities issued a package of measures in December, just before we broke up for Christmas, and those measures are summarised in the appendix to this report. As the Chair mentioned earlier, we experienced a delay in the publication of our 2021 accounts as a result of delays in the audit process. That's all I wanted to say, so I'm happy to take any questions.
Very good, thank you, Louise. I think just one tiny point of clarification. Obviously, the PSA process last time actually awarded 5 lots, didn't they, to 5 different firms. Grant Thornton were awarded the largest lot, and we were participants in that largest lot alongside all the other 7 Mets. So it's just worth noting that Grant Thornton didn't get everything from the PSA. It was a process by which 36 million of fees were allocated across the various firms over the 5-year period. So Linda, is it worth just tiny comment on where the other constituent members are in respect of their expectations of whether or not they're going to be opting in?
Yeah, I mean, we've had confirmation from all of them, I think, other than perhaps Birmingham at the minute, that they will be opting in. I'm seeing the finance directors again this Thursday, so we'll know where Birmingham are, I think, very shortly. It would be expected that we will all opt in. I just think from a value for money perspective and a control and assurance over the quality of the audit perspective, it's advantageous to us to not only secure the audit via the PSAA, but also then as a collective, if we get the same audit firm for the West Midlands as a group, that helps us all in terms of that whole of government accounts reporting. And we also have regular meetings then with our regional partner as a West Midlands Finance Directors group to hold them to account, should I say.
I see Helen is in the meeting. I'm sure she would confirm that you look to hold them to account. So
absolutely.
Okay. Just on the matter of us opting into the PSA appointment scheme for 23 onwards, one other point just on that, and it references back to Louise's observations and some of the feedback on the most recent process. Committee members may be interested to know that the proposal from the PSA is that actually the evaluation criteria is going to shift from one which was last time it was 50-50, 50% quality, 50% price, to one which is 80% quality, 20% price. And I think that reflects a very strong desire on behalf of the PSA and others to ensure that obviously the firms that are successful are able to deliver the audits in accordance with the desired timetables. There have been challenges, partly through obviously largely influenced by COVID, but I think that's an indication of the desire for the PSA to get the right outcomes here. So are committee members happy for us to opt in alongside all the other constituent members for the next 5-year period?
Happy to do that, Chair.
Thank you very much indeed. Thank you for confirming that. Very good. There was a specific question there from.
Just to understand, Chair, last time, I mean, is the overall picture of a PSAA, the audits, how many, I think last year it was only 7% perhaps, so the audits were done. The rest was still there. I'm just trying to figure out how far we've gone with it, though I'm minded to support it actually. And I'm doing the same in Coventry as well. We are trying to recommend it today to the council for approval. But this, I'm just trying to understand where we are, if the officers know what that issue has 7% moved further at all.
I think that's what perhaps Helen may actually know that. I mean, we're certainly signed and done. So as soon as I got ours over the line, I was moving forward really. At the time we got ours signed, clearly there was only about 10% nationally undertaken. But Helen, I don't know whether you know nationally where we are.
Yeah, we have certainly moved on significantly from that.
Sorry, Helen, can't hear much.
Yeah, we're struggling to hear you, Helen. Sorry.
I think your microphone is somewhere further down.
Oh,
yes.
that'll probably explain it because I've been drinking coffee. That'll be while you've been talking. Sorry, everybody. No, I think certainly from a firm-wide perspective, we've obviously moved on significantly. I think certainly down into the office, I think we've got a handful of other audits left to go. I don't know what the position is nationally, but certainly I think we've moved forward significantly from that sort of 7% I think that you were quoting. I think by Christmas certainly we were up to sort of just over 50%, I believe, and that's certainly continued to move on as we've gone through January, but I'm not aware in terms of what other firms are actually managing to achieve.
Thank you.
Thank you very much. So I'll take it that we are happy to agree to opt in for the PSA scheme for
yes, Chair.
5-year cycle. Very good. And then finally, I was just going to say on that paper that was issued just before Christmas from DLUHC, still can't get used to saying that. It's worth just noting that they are expecting to issue further guidance on audit committees in early part of 2022. So obviously once that guidance is issued, we can come back and have a discussion as to what those proposals are. And it talks about independent members and other such matters. And I also noticed that it references targeted training for audit committee chairs. So I look forward to listening to and understanding what is going to be made available. So, but anyway, and finally, should be just acknowledged that actually in that paper, the recommendation is that the deadline for the signing off of 21-22 accounts is now 30th of November. Although I'm sure, Linda, your objective is to achieve a deadline significantly before.
Earlier, absolutely.
Okay. I'm sure Helen has noted that point. Okay, very good. Thank you very much for that, everybody. Internal audit. I don't know whether is this going straight to Peter or is this coming via you, Linda?
No, Peter's going to take us through this, Mark. But just to say, this is a report which updates on the work completed by internal audit, which, as you know, is carried out by Wolverhampton on our behalf. Yes. So I think Peter Sandring taking us through this.
Yeah, sure. Thanks, Satish, and thank you, Chair, and good morning to everybody. As your internal auditors, we've got 2 reports for you today. One, an internal audit progress update, and the second one, the internal audit plan. And I'll pause between the 2 to take any questions you may have on both papers. So the first one is the internal audit progress report. ARAC members will probably recall that at the start of each year, you approve an internal audit plan, and next year's plan is later on today's agenda. In that plan, we list a range of audits that we intend to undertake over the next 12 months or so. and which we do, and issue individual reports to directors and senior officers across the CA. We tend not to then bring individual reports to ARAC. Instead, we summarise them so you get an overall view, a snapshot of where we are at any point in time. And this is the latest such progress report. And just to remind members that each review we do, we make a number of red, amber or green recommendations, and depending upon the severity of the issues that we think we've found and any particular control weaknesses, we always award a level of assurance at the end of each review, and that there are 4 levels of assurance that can be obtained. There's no assurance, which is obviously, as it sounds, pretty bad, limited assurance, satisfactory assurance, or substantial assurance. And we always say to committee members, if you see any audit reviews or a raft of audit reviews coming through with no assurance or limited assurance, then really that should set alarm bells ringing. But you'll be pleased to note from the report that we're presenting today that so far during the year we've made no assurance or limited assurance reports. They've all been either substantial or satisfactory. So at this point in time, there is nothing that we believe that will stop us giving a clean opinion at the end of the year on the adequacy and effectiveness of the CA's internal control, risk management and governance arrangement. So we're in a good position at the moment. On page 60, we list the reviews that we've undertaken this year. Some of them, as members will be aware, were carried over from last year, where because when COVID hit, there were some delays in completing some of those audits. So they were rolled over into this year, but their opinions will form part of this year's overall annual opinion. So we separate out in the summary of progress sort of 3 distinct areas. One, those audits that we completed last year, and as you'll see in the report, they were all substantial or satisfactory. 2, at our last meeting, we updated ARAC on a further 3 reports that we'd completed. Again, 2 satisfactory and 1 substantial. And since we've last met, we've completed another 3 audits. 1 around single commissioning framework, which was substantial assurance. 1 on the Transport for West Midlands COVID-19 management arrangements. And again, that was substantial assurance. We're just currently wrapping up a range of the key financial systems that we do across the combined authority. This is 6 or 7 individual audits looking at areas like accounts payable, accounts receivable, budgetary control, etc. And as things stand at the moment, those are all coming out as substantial or satisfactory assurance, and we'll report back in further detail at the time of the next meeting. Then below that, on page 61, we list the remainder of the audit plan that's to be completed. 2 or 3 audits are underway. The remainder are then scheduled to be undertaken later in the year, all to be reported back by the end of June at the latest, apart from the Adult Education Board review, which has been deferred until May 2022, as it says in our report, pending completion of a procurement exercise. That will be brought to the September ARAC meeting in all likelihood. So that particular review, the assurance from that will feed into the 22-23 assurance opinion. I was just going to briefly hand over to Sandra just to talk about the outcome of those 2 reviews that we're reporting back on today, where there was substantial assurance. Sandra?
Okay, thank you. So on single commissioning framework, we looked at the land fund and the programme management and administration of that fund within the single commissioning framework. And we found no major issues. We have raised 2 green recommendations, but they are as enhancements to existing processes for the project monitoring reports that are produced on a regular basis, and also development of the route maps for detail and timeliness of the decisions and process undertaken. So it's to enhance the management of those funds to add to the existing assurance that we can provide on that. If there's any questions, I'll move on to TFWM COVID-19 response. No? Okay. So the next review that we undertook was of TFWM COVID-19 response, and we looked at TFWM's approach to the management decision makings within their response to the pandemic, and it largely centred around the existing role that TFWM plays within the local resilience framework alongside Category 1 and Category 2 responders. And what was established as an extension of that was the transport cell, which provided overall governance and management, engaging with various organisations, the local authorities, and also highways England, etc., various multi-agency organisations. So it was a very wide membership to ensure there was a consistency in the information that was coming down from the local resilience forum and how that was being disseminated. It also built on existing TFWM data and management information that was already in place and being provided on a regular basis, both to the CA and constituent local authorities in terms of transport. But what it also brought about was acceleration of projects and initiatives that helped enhance the management and data that could be used by the transport cell and all the organisations involved to make their local decisions. In terms of the arrangements for decision making, we found that the transport cell was well established to impart information to help decision making, and also to then assess the impact of those decisions, the outcomes to inform future decisions was really important as the pandemic progressed, to have that reiteration of looking at the decisions made early on, whether they were effective, and then what needed to be done differently or the same as the pandemic progressed. We've made 2 green recommendations and enhancements. There was clear documentation of the actions taken, the decisions made. We felt that they could be brought out of meeting records into specific decision logs as part of good practice, although we did see examples of that in existence. And also in terms of recording the presentation of the risk register, so to demonstrate as part of the governance arrangements, the risk was reviewed and managed on a good practice basis. I'd be happy to take any questions.
Okay, well, thank you, Sandra. As chair of ARAC, I get an opportunity to read the full reports, so I can certainly confirm that these are fair summaries of those reports, and in particular on the second report, obviously you did identify a lot of good practice actually, which was encouraging to see. As you've highlighted, both reports had just 2 green recommendations, and substantial assurance. So, any further questions from other members of the committee on either of those 2? No, doesn't look like it. Just finish off then on follow-up of previous recommendations. And firstly, I should obviously say thank you for including the column highlighting numbers progressed. Obviously, I was keen to see that from last time's report. And it's probably worth just flagging, obviously, I've had a further opportunity to discuss with you 1 or 2 of the reports where progress didn't seem to be being made quite as quickly as it might have been. And you've provided explanations for things like the GDPR, the corporate complaints, and actually the West Midlands Rail Limited reviews back from 2020 as to where they are and why the progress isn't quite as it might want it to be. But any other comments you want to make on this particular part of the report? I don't know if Peter or Sandra.
No, Chair, just to remind the committee that with regards to the follow-up of previous recommendations, in the first instance, Lorraine, as the Internal Audit Liaison Officer, does a sort of review of agreed recommendations across the CA to get the responsible officer's views on whether or not those recommendations have been implemented within the agreed timescales, and wherever possible to obtain evidence to assure herself, Lorraine, on that. And then at a later date, we as internal auditors come in and we'll do an independent sense check on some of those key recommendations as well. So there's sort of a strong framework for following up in place. It's relatively new and is partly embedded, but I'm sure over the coming months we'll get that really ticking along nicely with how we work with Lorraine. Lorraine, I don't know if you wanted to add anything.
Yeah, I just wanted to add that obviously timing for reporting purposes, and we've had Christmas involved as well, which impacted on the timetable. So the update that we're providing at this stage on the status of audit actions is really only up until the end of November to allow us time. So I'm very conscious some of the dates were set as the end of this calendar year, and are still shown as items as outstanding, but they were very close to being completed. So hopefully the April reporting will be a lot more delivered by that point in time. Okay,
thank you. I'm quite a stickler for, we do really good internal audit reports, come up with some good recommendations. It's really important that they're then followed up and acted on promptly. Councillor Butt.
Thank you. Just to congratulate Peter and the team on the work they're doing, because obviously it's difficult with COVID to meet some of the people, meet some of the deadlines, and that's the same for every authority as well as ARAC. So I just congratulate Peter and the joint team that's delivering all of this hard work for us. Thank you.
Yeah, thank you. Well made, and also to thank the officers and the leadership team and everybody else, because to be getting all satisfactory and substantial opinions is also a very positive thing to see. So, and we look forward to seeing the report on the key financial systems at the next meeting, which I gather is, as you just highlighted, progressing positively. So,
it is.
Excellent. Very good. Do you want to carry on to the draft internal audit plan for next year?
Yes, thank you, Chair. Yes, the next item from ourselves is our draft internal audit plan for 22-23, which we're bringing to ARAC for the members to have the opportunity to review and hopefully approve the plan. And then once it's approved, we'll put it in place and start to deliver those audits next year. The first few pages sort of document the process as to how the plan is prepared, and in it we point out that obviously again Lorraine, as the internal audit liaison officer, works very closely with the leadership team across the combined authority in identifying what is commonly known as the audit universe, i.e. a range of areas that could probably benefit from having an audit review at some stage and where assurance needs to be provided. From that, they're then ranked as a high, medium or low. Now, this isn't risk. The risk is high, the risk is medium, the risk is low. This is just an assessment of where that assurance need would be best spent, because as with most things, internal audit's a limited resource, and it's important that we focus it on the areas where we can provide the most value to the combined authority. And Lorraine works with myself and particularly Sandra in helping to ensure that this is the case. And then the draft plan is initially prepared and shared with the leadership team to make sure that they're in agreement with it before we bring it forward to ARAC. And in the report, we identify the objectives, the key priorities of the CA, also the key risks that are on page 74. And as I think referred to earlier in the meeting, when you had sight of the strategic risk register, the risks that we capture in the internal audit plan are the gross risks rather than the net residual risk scores. So some of those risks listed are mitigated down to a sort of green or amber level as part of that process. Then the plan itself, sort of the meat on the bones, is from page 76 of the pack onwards. And as you'll see there, a number of the assessment of assurance need ratings are a mix of high and medium risk areas. If anything's deemed as a low risk, it tends not to feed into the internal audit plan. That doesn't mean that we won't look at it at some stage in the future. If the risk increases in that area, it may be something that is low, may rise to medium or even high, and if so, then that would be incorporated into the audit plan. The plan remains fluid throughout the year because the risk profile of the combined authority in all likelihood may change. If it does, we would then change the plan, amend the plan, we'd run it past the chair and then notify ARAC of any in-year changes. But hopefully members will see that it's a good mix where we capture a range of services that the CA provide. You know, some of them are banded under the cross-organisation heading, others then separated out between transport, housing, productivity and skills. And the idea of that is the wider coverage that we can provide, the increased assurance is there for committee members and the combined authority that the internal control systems are generally strong across the CA. Again, happy to take any questions on the plan, how it was constructed, or any individual reviews that are contained within. Thank you.
Thank you, Peter. Again, just very quickly for other members of the committee, obviously, again, I've had an opportunity to go through this prior to the meeting. Just to highlight a couple of things we discussed. The resources required here, you'll see in the plan it references 185 days. That is consistent with the number of days that were for the current year. And so there's a consistent use. Plus, we have the ability to supplement that with the time of Lorraine as the internal audit liaison officer. So that's not included in that 185. And as you've just heard from Peter, Lorraine's got an important job in following up previous recommendations. So there's that point. And then in terms of the detailed plan, I think a couple of things just to flag, we had a little bit of a conversation about Commonwealth Games. I know, that is again a very high level of focus for the board, as you can imagine, going into 22. But Sandra explained obviously that she and the team have participation in the Commonwealth Games Assurance Forum, which provides input there, which is useful. Talk a little bit about Bromsgrove Rail Station. I'm sure Councillor Baker-Price was interested to see that there on the list, and that is a specific area that TFWM were keen for us to look at, and I think having understood that more, I'm certainly supportive. And then the only other one that we had a little discussion around was the adult education, and you've heard that because of the change in procurement, we're moving into going to do that, but slightly later in the year. Just one quick query, and I think this came up, conversation with, I can't remember who the conversation with. There is another third party providing some assurance services, aren't there, around adult education? I can't remember who that was and what it is, but can you just remind me?
Yeah, I'm happy to provide that, Chair. Adult education budget have an external auditor which provides the assessment of the management arrangements with their training providers. The company they use is RSM.
That's right. Thank you very much. Again, it's probably worth just acknowledging that because it is an area of risk. It is an area that we've had some challenges historically and may have going forward, and therefore I think it's important that committee is aware of some element of assurance that comes from that source. Okay, open it up to other questions from other members of the committee in terms of the proposed plan for next year. Any questions for Peter or Sandra? All the way. Okay, if not, I take it therefore that we're happy to approve the draft plan, which I think does this go for final sign off by the SLT in due course, or the board, or is that it in terms of approval for the plan for the coming year? So I'm probably looking at Satish there in terms of the governance process for this.
Yeah, Lorraine, it's been to SLT as a draft, yeah. So we've been to put it into it. So is it finalised now, or do we have one more opportunity?
No, so it was shared with SLT at the beginning of January, just to allow them to have comments before it came to yourselves today. They were satisfied with the content, same as yourselves. We just need to now do a final review with the individuals who'll be the officers supporting us with each of these audits to confirm the time. And then we will bring it back to ARAC for final approval in April, and that will allow you then to see the schedule as well of when all the audits should be taking place. But I don't believe it needs to go through any further approvals other than to yourselves.
Okay, very good. Well, I think we therefore approve the current status of it and look forward to receiving the final version for sign off in April. Okay.
Thank you.
Thank you
very much. Very good. Right. At this point, we are required, or we need to consider the resolution whereby, in accordance with the Local Government Act, the press and public now be excluded from the meeting for the following items of business. Are committee members happy to approve that motion?